All right, guys. What is going on? What is Gucci? What is Gucci, chat? Are you guys ready to learn something today? Hmm? You guys ready to learn something today? We'll give it a few minutes. Let everybody hop on here. Everybody likes to be late. Might start giving out the stalls early. You know what I mean? We may have to start doing that. I don't know. We'll figure it another time. We'll figure that out another time. Okay. I have an idea. I have a couple ideas. I don't know if it's going to work out or not. It's something that I definitely want to try, and it will be a little bit more interactive. Let me ask you guys if you want something that's interactive. If I can spell correctly, hold on. Caffeine hasn't hit yet, chat. Okay, there's your question for today. I used to do questions all the time. I kind of stopped doing. I kind of retired those for some reason. But yeah, there's your question for today that you can answer in the chat. I'm not sure if non-members can vote or not. I still don't know. But who cares about non-members? I'm totally kidding. Just couldn't think of anything else to say. Let me see. What's good? Torty, who was first today. Felix, Scott, Admin, Akil, Joker, Eric, Roberto, Convicted Capitalist, Willow, Big James, Julius, Ferrero, Roche in the chat. I haven't had one of those in a long time, but they were my dad's mom favorite. So my grandma's favorite, or one of the favorites when I was but a baby Pip when I was younger, when I was in middle school. Rest in peace. Lambo pending. Can you please analyze Bitcoin? No, hell no. Bitcoin is dookie shit diarrhea dog fart. It's probably going lower. There's your analysis. What's good, Zen? If you were on here watching how to trade and make unlimited money for free and not willing to pay the $25 a month, you're a bum. Thank you, Willow. I appreciate that. Willow doing all the marketing for me. Hat tip to Willow. Thank you. Thank you. Okay. Let's do this shit. Let's do this. $20 votes, all yes. Okay, cool. What I'd like for you to do, let's see if we can get like about a little above like 40 people. Then we'll see if we can do something real quick. But I'm gonna give you all the details. All right, we're gonna go through this together, but it's probably gonna take a long time to really get the detail because there's a lot of details. Okay, and a lot of people think today sucks. Today's this or that. To be fair, Nasdaq is kind of ass water. I can agree to that, but there is still a high level of precision, especially when we get to the entry and exit portion. But We will get to that later. But before we do that, it's already in the Discord. You can see it, I think. But before that, now we got 40. Okay, this is what I would like you to do. Yes, I can tell we still have our caps lock on. Somebody needs a new keyboard. Somebody, you need to take some longs on ES or something and go buy a new keyboard. Or uncheck the caps lock key. It's right above the shift key, my brother. Please. Please do it. Trading becomes easy when you know what you're looking for. Yeah, exactly. Exactly. When you have the patience to wait for it and the courage to enter. I learned that from you, John. Thanks. Yeah, you're welcome. Teach a lot of stuff here, man. Jared representing. Bro is a paid sponsor by Caps Lock. That's crazy. Okay, let's get to the business, shall we? Let's get to the business. This is what I want you to do. This is what I want you to do. All right? It'll take 2 minutes. I'm probably going to give you like 5. But do this, okay? Go to my Instagram. Go to my Instagram. Or my Instagram story, that's fine too. But either way, I want you to watch the Dow recording. Okay? That's right, Jay. All right. Only caps for you, Nikki. Thanks. I was not going to wear a cap, but my beard is not shaped, and the rest of like the side I haven't shaved that recently, so going bald today wasn't going to look good. I don't have social media. Blocked. Me neither. Blocked. You don't have social media. You're missing the tweets. You're missing the recordings. You know, you try to do some cool shit, and everybody says, "Fuck off, John." God. You went into my chat. You voted yes. And now you're saying you don't have social media? Jesus. Don't ever become a mentor, man. I swear, you become a mentor and everyone just, happiness is just stopped out. You know what I mean? Never get any fucking happiness around here. Except for Willow. Willow made $600 before 11 a.m. That's pretty good. But everybody else, what the fuck, man? Okay, guys, go watch it. Okay? Go watch it. It's called Dow Recording. It's on my Instagram. Okay? Go watch it. But as you watch it, it's hard to note the entry. Watch the second entry. Okay? Do that. Watch the second entry and pay attention to the stop loss placement. Because you're not going to understand what I'm going to explain later if you don't actually watch my stop loss placement. You're going to miss it. You're going to think like, oh, no, I'll get it. No, the fuck you won't. Go watch it. Okay, go watch. There's music on it too if you'd like. It's only 1.5 minutes. It's under 2 minutes. Go watch it. You'll notice I get in right before the big ass move. Right before the Z mode, right before the Corvette candles come in, right? That's fucking weird. You see my stop loss placement, and you'll see it looks like I'm going to get stopped out, but I don't, and then it flies higher. And I want to explain all of that to you, but you got to watch the video. Okay? So what you see in the beginning, what's the first thing I point out? Thank you, Roberto. What's the first thing I point out? This is yes. This is Dow. All right, so what's the first thing that I point out right at the very beginning of the video? This. Original consolidation. OG consolidation. And then I speed it up. Okay, the next thing right? I put a gray box here, original consolidation. Then you see a red line down here, which is turtle soup. So well, I was on the micros, not the E-mini, but it's close enough for government work. So the first entry is right there at 380, 381 actually, but again, close enough for government work. So that's the end. That's the first entry right here. And what you'll see right after I label original consolidation, okay, second leg accumulation should blast us higher. Okay, that's a timing tool. That's saying, all right, we're getting ready to launch. Earlier in the chat, the Discord, right, the Discord chat, at 9:30 or 9:35, what did I say? ES should see what? What should it see? The chat definitely went pretty crazy today. So give me a second while I find it. It was, drum roll, 9:34. Oh, look at that. So 9:34, that's in here. I know I'm referencing ES, but right there at 9:34, this candle for ES. ES should see Z mode here soon if we are going to rally. That's just a fancy way of saying we're fixing to blast off. We're fixing to blast higher. And not only are we going to blast higher, we're going to do it with speed. That's what Z mode is. Okay, Z mode is not a concept. Z mode is a button on the Corvette that puts the vehicle in sport mode. I don't keep it in sport mode. I keep it in cruise mode because the steering wheel is much easier to move. Sport mode, it's more difficult, and I don't really care for it. Only in certain cases. But anyway, the point is, right at 9:35, I'm telling you, yo, we're fixing a blast off. We're fixing a NASA take off rocket ship to the moon, baby. But only we're not going to the moon, we're going to Terminus. Isn't that something? And a minute later at 9:35, I said, we'll see because NQ is dragging. That was kind of another car reference if you guys missed it. But anyway, let's continue. And then Simon said, what the fuck? Okay. So what actually took place? Let's go back to ES for a minute. What actually took place? Okay, 9:35 is here. Okay, that's where I was saying we're fixing a launch. Then at 9:50, oh, that's fucking weird. Right? 9:50 is right there, and then 9:51. Oh, that's weird. Isn't that fucking weird, chat? Isn't that weird? Oh, dude. These fucking macros, man. Oh, my shit stain. These fucking macros. But those don't exist. Right? No. That's not a real thing. That's bullshit. No. The buyers came in. Yeah, it's definitely supply and demand. Bang. Massive spike. We don't get 66.35 and a quarter. I lied. We do get 66.35 and a quarter, but we don't get above it. So we do not get the liquidity above that. So, yep, we trade back down again. We clear up this imbalance here, right? Weird. Then at outside the macro time at this point, but at 9:21, as soon as we get that little pop above it, there it is. 66.35 and a quarter is a partial. I said it's a partial because I still have, well, I have some serious doubts at the moment, but at the time, the terminus was the highest high of the original consolidation. But We could not get past this imbalance here, broke down, imbalance on the way lower here, can't get beyond that, and we roll over lower. Okay, but nonetheless, they basically did the same thing except for NQ. NQ was trash today. NQ was the Dow Jones of today, if you will. So now we'll get into the dirty details. Okay, do you guys want that? Do you guys want all the juice? Drop a 1 in the chat if you guys want the juice. Hopefully you watched the video. Hopefully you liked it as well. I really don't think you guys understand that watch time, likes, and comments really matter for the Instagram algorithm. Everything's ran by an algorithm, even price. So if you watch it, cool. But if you like it or leave a comment, or better yet, if you send it to a friend, that will severely boost the content on my page. So I would appreciate if you could do that. It's free. It doesn't cost you to do that. Okay. We got almost 60 people now. Cool. All right. So if we go out for a second, and again, a lot of this stuff was already mentioned in the Discord, and a lot of it was mentioned prior to Equities Open too. Go look at the timestamps. Okay. The TradingView timestamps do not lie. Okay. So we had Friday's close, right? Cool. We had all weekend, and then we get a gap down. We got a ridiculous candle yesterday. A lot of people think that it was, Trump loading up the boat, or some insider loading up the boat, big volume spike. Cool. Insiders trade, welcome to the real fucking world, folks. So we actually don't get like a normal rally. Okay. We don't get like a bunch of candles going higher. We get one candle that goes from 65.11s all the way up to 67.20s, right? So again, just massive manipulation. So that being said, it does paint a muddy picture because there's not a lot of reference points in that. Okay? Like what do you reference? When we have a big ass imbalance, we usually cut it in half. Well, what do you do when that's still too much? You cut it in half again. And you can keep cutting it in half all the way down, whatever. So instead of using that manipulation I'm going to call it a manipulation candle. You can call it a Trump candle. It doesn't really, who cares? But my main point is there's no reference point in that. I can't use that. There's nothing for me to use. Okay? So instead, what do we have? When in doubt, zoom out. So we have here a beautiful... Okay, we'll come back to that. We have a beautiful gap, right? So that gap here, Sunday's gap, okay? We really have to warp the chart in order to see this stuff. But there it is, okay? So your high end is up here. See that? Oh, that's gross. There we go. That's the high end because that's Friday's close. And there is Sunday/Monday's open. Okay? So drop a 2 if you guys are with me so far. Let me know. Or at least the members in the chat. You guys understand? Yep. 65.88 is the upper end. 65.10 is the lower end. Cool. All right. So now... this is where your learning curve is exponential and not linear. All right. We go down. We have a low at 12:30, a little bit after midnight. Okay, you can see how we dip into that gap, right? It's a fat gap, chat. Okay, it's like 70 points or 60 points or something. It's a big gap. Now, I'm not arguing that. We trade higher and higher all the way up until about London. So London is there. London opens here. We trade higher, and then we have a high with a slightly lower high. Beautiful. Trade lower. Consolidation, leaving very clean highs. Also, the original consolidation, if you note, we left it, traded back into it, left it again. What does that mean? Oh, I don't know, John. My mentor didn't teach me. Well, that's what I'm here for, baby. That means bearish until manipulation. Okay. So we're going to get distribution, probably. Unless we just run up for the highs, then you can't do anything with that. Bearish until manipulation. So then what do we have here? 805. So we're like pre-market. We get a low below that low. See that? And equities open took us higher initially. And then I tweeted. This was not a timed tweet. This was obviously not a very well-timed tweet because it was basically right at the high. But that's not what I was trying to do. I was trying to tell you, hey, listen and look. Clean highs for ES are suspicious. Did I mention lows? Nope. Did I mention a low? Nope. Did I mention Sunday's gap? Nope. I didn't mention anything except for clean highs, which are right there. Okay, all of these. But the main ones and the highest one is right up there. See that? So, real quick, before we continue, for some more juice, drop a 3 in the chat if you guys understand what I mean by clean. Do you guys know what I mean by clean? They are super close together. It's not something that's difficult to see. It should be natural. You know, like whenever you see men, whenever you see most men at least, when you see a beautiful woman, right? Your eyes are drawn towards her. She's attractive, right? It's easy to look at her. You know, versus like a big Bobby shaped bitch that comes in and she's shaped like a blueberry and, you know, overweight and sluggish. You're like, ooh, and you look away. Your eyes kind of burn a little bit. You're like, oh, fuck. You look away, right? That is low. That is high resistant highs. Okay. I can't even talk straight. Massively overweight people are high resistant highs and high resistant lows. You don't want to look at it. It's not good. It's not good. Thank you, Kraft. I appreciate that. That is a wonderful, that's like the best ever use of that GIF. Or not GIF, emoji, sorry. Clean highs are beautiful and they're attractive and they're nice to look at. They're like, oh, yeah, that's a bunch of highs right there. So when it's easy, when it's just visually appealing, like everybody can see when we're trading lower, everybody can see there's a cluster of highs right there. Hey, Tony, appreciate the $5, man. I appreciate that. I just joined. Where should I start with your videos? Well, there are playlists. If you get in our Discord, you can go to the Start Here tab. There's an Excel spreadsheet that hasn't been updated in like 3 years, but you're definitely welcome to check that out. And yeah, if not, I would start with the free beginner series and then the other playlists after that. But the free beginner series, you're going to learn the basics, which is actually what I'm showing you right now. You're going to learn what these are right here. You're going to learn that there's a low and then a lower low. This is actually a soup, but this by itself, this a la carte is high resistant lows because we have a low and then a lower low. That is a stop loss. That's not a target, at least for right now. Okay. What you're also going to learn in that series is that a set of highs like this, where you have a high and a slightly lower high, That is a target, okay? So this is a stop loss. This is a target, okay? So when you know where the markets shouldn't go, while also knowing where it should go, that's how you learn to shift probabilities in your favor. We're not aiming for perfection. I've shown you perfection, but we're not aiming for that. We are looking for probabilities, okay? So at any point in this price range, it is more likely to go higher than it is to go lower, okay? Then you can watch the rest of that series. You can learn a little bit about risk management, and I forgot what else I put in there, but there's good stuff in there, okay? So that's where I would start. So let us continue with what we were talking about, because I haven't got to the juicy stuff yet. The highs. He said, I'm gonna have to take that and use it. You can use everything that I give you. You can use it all, dude. But anyway, I'm glad you guys remembered Bobby, though. Wonder what she's up to. Probably eating Twinkies. But anyway, this is the original consolidation. We leave it here, back into it there. We leave it again. Bearish until manipulation. So we get we just get a cluster of highs here. Love to see that. The more the merrier. Okay. So then here, we dip below that low. Can everybody see that? I think so. That low right there, see that? Gets traded into right here, bang, and then launches higher. So before, I know the markups are on here, but like before that, what you'll see is this right here. You'll see this. You'll see that low got taken out right there, and then the market rallies off of that. So somebody is long in here. Somebody's long right at the open. Somebody's long below, that low or right after it or whatever, right? Traders are trying to catch the bottom. Excuse me. There's a saying in life that the early bird gets the worm. In trading, that's not necessarily true. The early birds usually get stopped out before the move actually occurs. Okay, the market capitalizes on impatience. If you didn't write that down, you fucked up. So now that we have a low, right, and that was taken, now we have a lower low below an old low. That's what a turtle soup is. Thank you, Julius, for the visual. Poor guy. He has a smiley face. He doesn't know he's fixing to get wrecked. But yes, that is a turtle soup. Okay? A lower low below an old low is a turtle soup. But now wait a second. How do I know? How do I know that that's a turtle soup? Well, because I told you. But also, look where we are. Let's move this out of the way. Look where we are. Where are we? Look at your screen. Look at this big-ass gray box. What is that? That was Sunday's gap that we talked about. We're still there. Okay? That gap, 65.88, 65.10. We're still there. But look where we are in relevance of the range. Where are we? We're in the upper half. See that? We are in, that's a horrible color. That's a little bit better. It's just visually, I'm trying to get you to look at it. Okay? So we souped, right? We souped this low and the pre-market low into Sunday's gap and left behind these highs that I told you about on Twitter. Right? I wonder what the cost of that was. And in the back of my mind, I wanted this as well. But at a minimum, these were the clean highs, not up here. Okay? So that is the manipulation phase of what? I don't know, John, the manipulation phase. What do you mean phase? Well, unlike us emo kids in high school, right? It's not just a phase, baby. It's not just a phase. But these are. But this is. These are the 7 phases. Original consolidation, distribution, redistribution, manipulation. So right there, bang. That's what I'm highlighting for you right now. Bang. Manipulation. Okay? Manipulation always, always, always sets the low. It never doesn't do that. Always. Every time. Unless there's a divergence, yes. We don't have that anywhere here. So with that exception not in mind, that's the manipulation portion. Right? So what did I tell you a moment ago about this range here? What did I tell you about this range? I said at any point, right? At any point from this high down to this low, at any point, the probabilities are we are more likely than not to go higher than we are to go lower. Right? Now, this is what threw a lot of people off today. Okay, a lot of people, you know, they don't understand high resistant liquidity runs or how to spot them. I mean, as soon as you get like 2 or 3 candles like that, yeah, you're in a high resistant liquidity run. It's muddy waters. And then people get emotional and they can't see. That's why I titled the stream the way that I did. Clearing out the muddy waters with precision, of course. So yes, Tiago, thank you for that. A little bit ahead, but it's all good. What's after manipulation? Every time. Every time. Every time. Okay? The algorithm is going to have a shift in the state of delivery. I'll show you that in a second. After those first initial couple of shifts in state of delivery, you're going to get a low risk buy. Okay, you see that little dip here? It really probably should have been like down here, but I made this in July of 2024. I wasn't thinking about it. I was just trying to give you a visual of how the algorithm books price. Okay, so after that initial shift in state delivery, if you didn't get in below the old low or right after it, it's that next retracement as the low risk buy. Okay, so before I show you that, I mean, obviously you can see it, but before I show you that, I'm going to go down to the 1 minute for a second. How do we trust that those equal lows are not going to get swept? Because they're very, very small time frame. Okay. We're already in Sunday's upper half, and this was a turtle soup here. And that's like, it's the same low. I'm pretty sure they're the same. Okay. Just like my exes, all the same. Anyway, so that imbalance right there on the way lower, that was the last one. That was the last one. That was the caboose. Okay, so what's happening right here? 857. Look at that. I'll zoom in. I'll zoom in. Don't miss this. I know the purple, the color scheme today is crazy. I get it. But look, imbalance here. See that? We trade inside of it here. 857, right? Oh, that's a strange time to be doing anything, isn't it? Oh, fucking weird. Right? 850. Yeah. All the supply and demand people came in at 850, started buying it. That's what happened. That's really what happened. There's no algorithm. So 857, okay? Right there. Boom. See that? What do we do? What do we do? We trade not only above it, but we close above it as well. There's your shift in a steady delivery. Okay, what's happening right here? Look at this candle. See that? This is that Christ is King candle, baby. That's a reminder. Okay, you see this cross right here? Christ is King. Right there in that inversion. Bang. Okay, what did Jesus do after 3 days, baby? He rose again. He rose again, chat. You better write that down. Okay? Love that. Right? Love that. And then, so we trade through what? All of the down candles. See that? See those down candles right there? Bang. There's another shift to the state of delivery. Ooh. So we had one on a 1 minute. Christ is King. Now, although this is a shift in the state of delivery, I want you to look a little bit closer. You want some juice today? You want to learn something new that, well, it may not be new to you because I've shared this before, but yeah, I really don't feel like explaining all this shit, but stuff rather, sorry. Why did I tweet about ES, but I traded Dow? Some of you might be thinking that. Well, because I did trade S&P, and then I moved my stop too early. And I didn't want to re-enter ES because it was weaker. So then I went with Dow and traded the late stage. So, goofed up. But right there was my entry. That right there. Okay? Why would I buy something like that? Well, it's support and resistance, of course. It's Sunday's gap. It's trading back into Sunday's gap. Turtle soup. We get back above Sunday's gap. And then what does price do? 65.88.5. Sunday's gap. That's a long. We already got the shift in the state delivery. If you didn't catch that, that's your next opportunity. Look, I ain't going to call it a retest because I don't believe in that shit. But if you'd like to, that's what that is. You can call it whatever you want. I don't care. But that right there, that is a long. So how did I get out break even? Because after we got the shift in state of delivery, I added one here. And then we came down right there. And that is what got me out break even. And then I said, okay, I goofed up. And I could either re-enter or just wait for a couple minutes and figure it out. All right. Would you like to learn some more supply and demand concepts? Drop a 4. Drop a 4 in the chat if you want some more juice. What'd you learn today? You learned what a turtle soup is. Shift in the state delivery. What is that? That was the last imbalance I got traded through. That's a shift in the state delivery. That's one of them. The second one is these down candles here being traded through. That is also a shift in the state delivery. So you learned what a turtle soup was. You learned 2 different shifts in the state delivery. Right? You learned how to trust lows. We talked about Sunday's gap, higher time frame context, top-down analysis. Isn't that one of the checklist points from yesterday? Top-down? I don't know. You wrote it down. Check your fucking notes. So that, right? What is price doing here? Let's do this. Let's do this for a second. Let's take the wicks off. Let's take the pants and the shirts off. Okay? We're going nude beach. Nude beach mode, chat. No wicks. No pants candles. No shirt candles. Okay? Talk about a naked chart, right? All right. That's only probably funny if you're a dad. Not that I'm a dad, but I know my sense of humor is a little dry, but I don't know. I got to spice it up somehow. Look at where the bodies are. Look at where all the bodies are. Look at that. Where are they stopping? Where are they not closing? They dip into the lower half. They're dipping their toes into the water and they're going, oh shit, that's cold. I ain't going in there. I'm not going in the water, dude. It's too cold. There's jellyfish in there. Yeah. So where are we going to go? We're going to go back to the house. You see that? That is a mitigation. I need to zoom in for this one. Gap and imbalance right there. Oh, shit. Yeah, how many people had their orders right there? I don't know. But I do find that interesting, though. That's a very, very small imbalance, right? The market only does two things. The market only does two things. It trades to either liquidity or an inefficiency. That's an inefficiency. That is liquidity. Equal highs right here, that's liquidity. Is that really a move you want to capture on that? Probably not. That's a level of liquidity. And so is that up here. And the market does what? Trades to that level of liquidity. How far? To the extent of the next imbalance. That's an inefficiency. Wow. How controlled is that? We take out that low. We can't get beyond like the upper quarter level of Sunday's gap. Shift into stay delivery. Perfect. Shift into stay delivery. Mitigation. Stay in the upper half. Well, the bodies is what I'm referring to. We dip in the lower half only to the extent of an inefficiency. That's algorithmic. That is purely algorithmic. That's what the algorithm's doing. It's looking to the left. It's looking into its history. It's looking at time as well and going, where is there an inefficiency? Because my code tells me to take price into inefficiencies to offer efficient delivery. That's how that works. So we go right to the extent of that. Where do the bodies close? Upper half of that mitigation. That's bullish. Oh, then we get 935. What did I say earlier? Oh, 935 is when you said we should launch if we're bullish. Oh my God. Reading price like a fucking book. Reading it like words on a page. There's not words here. There's only candles and boxes. And my brush tool, of course, which I haven't gone over today. But, oh, I did a little bit of brush tool earlier, but that's really just more of a troll. But that's reading price like a book. Turtle soup, that's the low. Any low risk buys in there on the way up is fine because it's right after, it's either at or right after the shift in the stay delivery. That's still going to be low risk buys. But if you don't like longing on the way up, and you like longing on the way down, I'm not going to fault you for that. That's fine. Low risk buys anywhere in here. That's why I said earlier, anywhere in the range, anywhere from that high down to the low that's been set, anywhere, at any point in time up until we meet that high, okay? From that low to meeting that imbalance, everything in here is a buy. Everything, all of it. It's all a buy. Every single concept, every single inversion, every single time window, whatever the case, it's all buy. All of it. Because again, we're going to have the low risk buy, then we're going to have the first leg. And in this case, we should have had a second leg. We didn't. But even then, the minimum is going to be these clean highs. And that's what we got. So that's why I said at 935, which is right here, that we should start launching if we're bullish. And we did. You guys don't even understand the level of insight I just gave you on all of this stuff. Why was the low set? I told you. What were the buying opportunities? I told you that. How did you know we were going to go higher? I already told you that. As a matter of fact, I gave you Dow before the market even fucking opened. You need to see that too? Fine. I'll show you that too. It's a download, not a screenshot. Sorry, different folders. Different folders, chat. Okay. What's this right here? Oh, fuck, you guys can't see that. Right here. Look up here. Look right up there. See that? 8:25. That is 5 minutes before equities open. Prior to equities open. Okay? Captain Hindsight's always at your service. I'm always at your service, baby. See that? So what am I pointing out to? This is actually YM, not the micros. But the micros have the same shit. Original consolidation. Not the same high as ES, but still very clean highs. Still a consolidation, right? Which was a level of distribution. And then right here, it took out that old low. And before equities open, yeah, I know, G. Good thing I'm not shaped like Santa Claus, but I give you gifts like Santa Claus, right? Yeah. Anyway, so that's what I'm pointing to. I'm only pointing to higher pricing. Okay. So what did Dow do? Same thing. Souped Sunday's gap, shift in state delivery, bang, right there at 25%. Higher, retracement. I don't even know what we traded into. There's a small inversion right there. We launch, and then you see me long again right there too. You remember earlier I told you to watch the, I told you to go watch my Instagram reel if you haven't seen it, and I longed it right there. Okay? On the wick of that big ass move. Now, how the fuck does somebody time the market like that? If it's all supply and demand, well, I should be looking at indicators and finding out where the supply is and where the demand is, right? Well, that wasn't on my chart. That wasn't anywhere. You don't see that. But yet you see me getting in on that right there, right before that big ass move. And then what did you see? What did you see? My stop loss went like right about here. And then this candle looks like, oh shit, it's about to take its stop loss. And guess what? It doesn't. And then it goes higher. And then eventually I TP. I tried to record it for my for the Instagram story, and it took so long. I actually had to go to the bathroom, and I was like, I'm gonna be really fucking mad if I'm in the bathroom and the TP hits. And of course, what happens? I'm in the bathroom and the TP hits. So that's great. So how did I know to buy that as an add-on before the big move? Look at it. What do I tell you all the time about market maker models and about the various ranges? 25, 50, and 75. I'll give you guys a minute to answer. We got 64 people. I know the chat's only member only, but somebody knows. If the market's ran by an algorithm, then the algorithm is going to take price to a new pool of liquidity. Since Dow is the strong, all the indices were weak as shit today, but if Dow is the strongest of the three, then the Dow has a much higher chance, because it's not perfect, it's not guaranteed, but probabilities are, if they do run higher, Dow is the one that's going to go for its original consolidation. And ES might follow suit. That's why I tweeted, I said it might if we continue. If it's ran by an algorithm, then what it's going to do, it's going to cross into a premium, in which it does right here. And I told you, once it crosses into a premium and it goes back into a discount, into a premium again, 50% is a long. That's why. 50% is a long. You might not think it's a long. There's people out there that might not think it's a long. You can think whatever you want, but you can't argue with the chart. And you can't argue getting in right there with virtually zero drawdown and going straight to profit. That's fucking top tier trading, period. If you didn't get in down here or here or here, that right there was one of the last opportunities to get in with zero drawdown. Zero. Zero. Maybe like a couple ticks because it's Dow and there's a lot of points. But that's it right there. Here's another thing too. You really want some fucking sauce? Because now we're at the end. I gotta drop it all now before we head out. We'll probably go over the session a little bit. That's okay. Okay. You want some more sauce? Drop a 5. I'll give you 2 more things and then we'll head out. Actually, yeah, I'll give you 2 more things and we'll head out. If you drop a 5 in the chat to let me know. I'm going to give you 2 things. Well, 2 more things because we went over a lot of stuff already today. But I'm going to give you 2 more things. Are you ready? Oil going crazy? I don't even look at oil. I couldn't care less about oil, to be honest with you. Gas could be $20 a gallon. I'll still buy it. I probably wouldn't like it, but I'd still buy it. Okay. Here are the last 2 things. Number one. I've always said this for a long time. It's not the immediate rebalance. Yeah, I don't even think we have that in here anywhere. It's not the immediate rebalance. Here's 2 things. Here's the last 2, and then you can be on your way. I told you all the time that between 75 and 50% usually does what? Between 75 and 50% before the final move usually does what? That's where you usually find manipulation. There's a short-term low right there. Oh. That's the Y-Slime model. That's buying below old lows. How do you know that that's going to get taken out to go higher? Because it's 950 and we all know that the markets are ran by an algorithm. And we know that the algorithm only does 2 things. It goes to liquidity and inefficiency. So what's that right there? Level of liquidity. And then 950, right? Isn't that strange? Isn't that so strange? God. 951, bang. And we get to another pool of liquidity. At 959, just like ES from earlier, we have a fat imbalance. It trades into that, no problem. The algorithm is rolling over price, okay? Because it offered buy side here, came back for sell side delivery to make a, it's not entirely efficient, but an efficient market, okay? Once we did that, cool. Now the algorithm is going to take price higher. Okay? So there's your first thing. Manipulation. Whoops. It's always going to be at the lows, of course. But again, you have to remind yourself that before the final move, not every time, but in a lot of cases, before the final move, it's going to trade lower to either an obvious low or equal lows or something inside of the range to get traders out. Because traders, when they see big moves, you know, they get a hard on and start to move their stop up close to the market to lock in moves. It's not a terrible habit. If anything, I think it's actually a good thing. I think it's a good thing more than it is not, unless you keep doing this to yourself where you get out at half the move and then miss the second half of the move. If you're constantly only catching like half the move, I think that's a problem. Can you still be profitable? Can you still grow an account? Yes. Is it optimal? I don't think so. So all the traders that jam their stop up too quickly, they're getting knocked out. You don't see that in the video. You see me buying that. And then immediately higher. And then here's the icing on the cake. You ready for this? Here's the last thing, and then you guys can have a beautiful rest of your day. It's 79 degrees out here today. This is the last thing I'm going to give you. Oh, damn, Tiago. Rip. Okay. when you saw this, right? You saw this big move higher, and at some point, I took my stop. Okay. I don't know what color to use. We'll just use purple. Okay. I took my stop that I don't remember where it was originally. Yeah, I can't remember. But when I moved it to like right about here. Somewhere like right here. And this candle looks like it's going to take me out. It looks like it. In real time, like if because I sped the video up, obviously, to crunch a 45-minute video into 3 minutes or 2 minutes. But at the time, this is printing a fat-ass down candle, and it looks like, yeah, it's going to stop me out, but it doesn't. That's some really fucking awesome stop loss placement. Now, how could I do that? I don't always get it right, okay? Like for ES, I fucked up on that. I wasn't expecting a high resistance liquidity run, so I can't predict everything. If we were to cut this candle, we're going to take this off. If we were to take this candle, okay, we're looking at the down candle, and that's it. We're not looking at anything else. Okay? Take this off as well. That's all we're looking at, is we're looking at this down candle, and we're grading it. Upper quarter, halfway, so the upper half, and then we have 75 and the lowest end. Right? Are you guys still here? I feel like the chat disconnected for a second. Is everybody still here? Drop a 1 in the chat if you guys are still here. I don't know if it's YouTube or somebody's trolling me. Okay. Thank you, guys. Thank you. Okay. Every concept has an inversion. Every concept has a premium and discount. If we're bullish, we should not trade to the lower end, or we should leave a portion of the lower end open. Oh. So the lower half, right? The 75 level and below that, well, that never got traded into, did it? Go back in time. Go look at your volume indicators and go tell me there weren't buy orders in there. There's orders all over the place. And you're telling me there's buy orders in here that didn't get triggered, but then the market went higher? Now, how the fuck does that work? How the fuck does that work? If there's a willing buyer and a willing seller, right? Right there or anywhere in here, and the market just gets close and then runs off of it. How does that work? Explain that. Why, if it is based on supply and demand, why would that not work? Why didn't it work? If there's orders there, why didn't the market do it? Why couldn't anybody get filled in on that? And then it went higher. Because it's algorithmic. I told a lot of people on my Instagram, I'm like, I'm going to win you over one day. It might take a while. You're going to need to see it over and over and over and over and over again. But I'm going to win your fucking ass over at some point. You will bend the knee. You will bend the fucking knee. Understanding liquidity is up here. Understanding liquidity is here. Understanding an inefficiency is here. Understanding soup, low risk buys. I don't know if that went back into Sunday's gap, but ES definitely did. Right there. Understanding soup, low risk buys. That Sunday's gap, rebalancing, mitigation. I told you every model that you know of pans out in a market maker model. All of them do. The mitigation model is here. The Weissline model is here. The next candle entry is here. Down candles are sending price higher. Markets are moving inside the macro times. How could that work if the market was entirely random? If it was based on supply and demand, none of this stuff would keep working, but it keeps fucking working. Markets still move at the same times, and they still do the same shit. That's only evidence of one thing. That it's controlled. It's algorithmic. You can fight it all you like. You can fight it all you want to. You can deny the evidence in front of your eyes. But yet, 75 to 50, that took that out. Don't go to the lower end, but we go higher. Like I pointed out before the market opened at 825 right here. So right there, I'm pointing here and here. And that's exactly where the market went to without any indicators. So believe whatever you'd like, chat. You can believe whatever you'd like. And as you can tell, I don't always get it right. Look at that. 66.53 would be next if, that's a big key, if we can see further upside. But we don't do that. We break down instead. So I even have an alert there. I expected that. I honestly think 100%, honest to God, I thought we were going to trade above that. But we did not. Dow was stronger. Dow's like actually flat right now, and ES is down, and NQ is actually down 0.6% too. So YM is our strongest index today, which is not great, but the markets do what they do. I don't always get to pick what's going to be the strongest and weakest. I don't control markets. I have no influence over this stuff whatsoever. None. Best I can do, interpret price and interpret what the algorithm is going to do. That's how you take good trades. That's how you take or get good bias. That's how you're able to tweet and then see the manipulation and then see where you thought it was going to go there. And in a lot of cases, okay, this will be the last thing. Sorry. I always have like 75 last things. I said this earlier, now I just remembered. I told you that I would go over the entries real quick, real briefly. Okay, you see me label it turtle soup. We rallied, retracement. Okay, now by the time I got to YM, okay, this is all that was offered. So I had some down candles here that price was trading off of. There's an imbalance, an inversion right here. I'll zoom in. Okay, see that? See this imbalance that got traded into right there to go lower? We get through it. So that was once bearish. It's not bearish, but it saw sensitivity. So now it's going to be bullish. Bang. All along, that same low was the one that got traded into. And then look at that. You can see the entry candle. Look at that. Fucking look at that. That little blue arrow right there, that candle, that's what you see me entering on, 351. You see that shit? And I type it into the chat in real time saying, hey, one more offer in discount. One more offer in discount. That means this is your last chance. That is your caboose to get in the move or piss off. Higher, doesn't stop me out. Bang, I get out at all three. 46, 656. Right up, not at the high, a little bit above it. A little bit above those highs. Bang. And just like that. Isn't that juicy? This looks almost as good as the ribeyes I've been making. Ah, John. Damn it, you're so egotistical. Well, yeah. Look at the chart. Look at my entries. You'll see why. Sorry. It slips out of me, Chad. I'm a human. I'm working on it. Do you always enter on the strongest one? No. No. Sometimes I trade the weakest one. But as long as there's a soup, then it's cool. Ideally, the best entries are going to be at the soup or right after it. Like right after that, the next candle, that's a super good entry because you're getting in right after everyone else got stopped out. But that's why I said earlier, why am I entering in here? Because I was entering at the lows on ES, but I moved my stop too quick because I added on, right? Because I was long 2, then I added 1, but I did not expect a high resistant liquidity run condition, meaning I did not anticipate that we would have wicks on ES like that. Let me just take everything off now because there's too much shit on here. But I was not expecting wickage. There's more wicks here than a fucking candle store. That's hard to trade. Okay. So I told you originally I was in on the Sunday gap high end right here and immediately responsive. And so I added one here and my break even was like basically right there. So I got like bullied out right at the low. So yeah, you know, I feel like a retard, but you know, it's not that I only take wins, chat. That's not the case. Okay. Yes, I'm a teacher. I'm going to show you the good shit. I'm not going to show you every losing trade. Okay. But I do take them and I do take break evens as well. So I fucked it up. I got out at a break even at the wrong spot. I should have kept my stop open, but I was trying to be too fancy. I was getting too big for my britches. So that's on me. Ego is the enemy. And that's true 100% of the time. So what I wanted to do was re-enter, right? I could have re-entered on anything. But after that, I had a few minutes to myself and said, okay, you know, am I wrong? Are we going to go lower? Or am I right, but I just mistimed it? And then I thought, you know what? NQ is dragging absolute ass in here. And to me, that's what was holding ES back. Okay. It's kind of like, think about it like this. Like if NQ and ES went to the bar, they went to the club, right? And everybody's drunk. And ES wants to get into a bar fight. ES is like, come on, let's get into a fight. And NQ is the voice of reason saying, hold on, buddy. Wait. That guy's bigger than us. They're going to kick our ass. Hold on a second. Like, don't go over there. Don't go over there. And NQ is holding back ES. Does that make sense? It's kind of a weird analogy, but it's the best one I have. And so NQ is being held in here. It's being accumulated, but it's being held. And so when you look at Dow in the same price action, it's not being held. It's actually going higher. So NQ is stopping ES. Hey, bro, he's going to kick your ass. Don't go over there. And Dow's like, all right, guys, you know, screw that. I'm getting in. And Dow's going for it. So, but again, by the time, because I had to do the analysis, you know, I'm like waking up too. That takes a little bit of time as well. You know, price might be at its second leg, but I'm at like the low risk buy. Okay. I'm like just now cracking open my breakfast, right? So by the time that I realized that, okay, ES, I mismanaged it. It's also weaker than Dow. Dow has the same clean highs and even higher highs up here, like a set of highs that's higher than these. But Dow is the strongest. So Dow is actually the better long. So don't re-enter on ES. Go take a brand new entry on Dow. And that's what I did. And I finessed the absolute fuck out of that. And I recorded it. I recorded right after I entered the first one. And then I recorded all the way through until terminus to show you what it looks like. I mentioned it in the pre-market and then traded it for you and recorded it. All for free, dude. All for free. Can you fucking believe that? I'm telling you where it's going before it goes there. And then showing you entries on the way there. And showing you the TP. Wow. For free. Not to toot my own horn or anything. Not to toot my own horn, chat. But that was a great question, Tiago. No, Jay, I don't. In case you didn't see the chat, Jay asked a few minutes. I know I've been rambling a little bit, and I have like 75 last things that we're doing here. But Jay asked, do you have a video that explains your process for what you look for in the morning to determine your narrative for the day? I don't. I wake up and snipe. Okay, that's it. I wake up and I snipe. Not every day, but I don't snipe every day. I wake up every day. But the point is, when I get to the charts, the first thing I'm looking for is where are we on the daily? And levels of liquidity. I'm immediately going, okay, do we have a low? Do we have London's low? London's high? Do we have Asia low, high? you know, what do we got? And it's so easy to see. That's why I opened up with that. I don't know if you were here earlier, Jay. I opened up and said, look, when you see highs like this, it's attractive. Your eyes go right to it. Like when a beautiful woman walks in the room, you're like, oh shit, that's a beautiful woman, right? Unless you're with your girlfriend, of course. Then she's the prettiest in the world, right? That is attractive and your eyes go right to it. And if you see that easily, everybody else sees it easily as well. So everybody else is going to have liquidity there and up here too. And for Dow, same thing, clean highs and clean highs. So as soon as we see that, I'm like, okay, we're going there. But I got to wait for the low to be set first. So isn't that equities open right here? And it dipped below equities open, buying below the open in bullish conditions. Oh, you never heard of that before. No, that's a brand new concept, buying below the open in bullish conditions. Nobody's ever talked about that shit before. Open, low, high, close. Open, low, high. Close the trade, not close the candle, close the trade. Capture that expansion and piss off. All right, this will be the last question from Zen. When drawing the fibs from the target to the low, let's do that. That's how I do it. When drawing the target, when drawing the fibs from the target to the low, and Zen asked, is that another way of looking at a shift in the state of delivery or a change in the state of delivery? The answer is no, it is not. It's not. There is nothing inherently magical about the price levels other than 50%. 50% is the only price level that is like, you know, the part of the logic wise, because 50% oftentimes is oh shit, what's the term? It's considered fair value. 50% is considered fair value. That's why 50% in bullish markets is a discount. Because even though you're halfway from the low to the high, it's actually a discount because we are going higher. It's a prediction, not a reaction. It's predicting, saying we got soup, we got liquidity up here and liquidity up here. So we are at fair value, which is one of your last opportunities to get in before the move, before the final move at least. But it is not a shift in the state delivery. This is a shitty example. This is not. That's a beautiful example right here. Last imbalance, on the way lower, turtle soup, we trade through it, and then right here, price is king, rose again 3 days later. So that is a shift in the state delivery. The algorithm, okay, is referencing that. Offered sell side, now we have buy side, cool, bang. So what was once bearish, it ain't bearish anymore, it's going to be bullish. That concept has become inverted. Every concept becomes inverted. Go watch Top Gun. I was inverted. So, again, it's algorithmic. It's an algorithmic principle. I never learned that in supply and demand school. I never learned that in support and resistance school. Never learned that in any of those schools. Let me see. Baby pips back in like 2015. That didn't teach me that either. But I'm teaching you. And then all you do is slap a macro on top of it. That's time, price, and context in real time. And yeah, Akil, I know it's a lot of stuff. We're already 20 minutes over the session. It's a lot of information. I know. It's like I don't know, man. It's a lot. But I do that on purpose. because I'm not going to sit here and try to bullshit around. No. Fuck that. Let's get into the details. Look at this. Look at that. Look at the timing here. Look at the context there. Law number whatever. Bing, bang, boom. Here are my entries. Go watch the recording. Da-da-da-da-da-da. Yeah. Not too many mentors out here doing that, huh? All right. Y'all be good. Be blessed, man. We'll be here same time, same place tomorrow on Wednesday, the 25th. Don't forget, book of the month is currently Stillness is the Key by Ryan Holiday. If you haven't finished it, you need to. This is like my third or fourth reread. And book of the month for April is the Meditations of Marcus Aurelius. So go ahead and start looking to order that pretty soon if you have not done so already. Y'all be good, and I'll see you tomorrow.